It's time for the big three. We've got 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts as usual. Here to take us through the trades is Scott Bauer, the CEO at Prosper Trading Academy. Great to have you both with us. Scott, thanks for being with us to start the week. Would love to hear your thoughts on how the markets are starting the week.
Yeah, it's pretty tough. The uncertainty again around tariff talk. It's not. I would say it's not as volatile yet as Liberation Day was, but there's certainly a ton of uncertainty. So the market doesn't like uncertainty, and that's why we're seeing the VIX rising and the market, really just selling off, because when people panic, people are uncertain. What do first? They sell.
Yeah, they sell. All right, so let's talk about this first trade here, and if it involves you selling anything here. We're talking about JPMorgan Chase. Walk us through that pick.
No, I'm actually very bullish in JPMorgan, especially down here. The stock is really right at the 200-day moving average, which, if there's ever been a support area for JPMorgan, it is this 200-day moving average. So this is something called a Texas hedge, which is kind of trader talk. What it means is, in this case, it's an uber bullish trade. So I am buying the March 20th expiration 310, 320 call spread. I'm selling the March 20th expiration 290, 285 put spread to help finance some of that call spread. So I can do that somewhere in the range of $1 or $1.25. My max risk for this would be if the stock is below 285 at March expiration. But, I look at these technicals. I also look at the fundamentals of what's going on here. And this, to me, looks like a ripe opportunity in JPMorgan.
All right, Rick, so as we look at the technicals for JPMorgan, are you also seeing the potential for a ripe opportunity? They are trading lower on the year so far.
Well, I think we have our eye on some pretty similar price levels. First, I have 292 highlighted to the downside more specifically here, because we saw a repeated low point there, bottoming out there 3 separate times here. So roughly, 290 is a notable downside area to watch out for. Then to think about that 320 area, 318 to 322 is our green line here, and then our red line as well. So we saw that this kind of zone here, we saw price frequently stop in this area. It was often a source of support or resistance here. That's around where we topped out again most recently. So kind of a similar boundaries that Scott and I both had our eye on here. To kind of dive into the chart a little bit more, overall, our upward sloping channel here is on the verge of being broken here. The day is still pretty young, but we are starting to dip below that 300 level. We haven't really made any kind of significant new relative lows beyond our previous low points here, but we are breaking below that 300 level as well as our trend line there. We can also see that our downward sloping trend line, beginning with those highs near 337, we are still seeing that in play now. So you could kind of argue it's starting to form into a symmetrical triangle type shape here. If we do start to recover and if price moves back within those boundaries, that could be something to consider. So now, if we look at our moving averages, our 3 shorter-term moving averages are right on top of each other. They're starting to accelerate to the downside more. So this area near 305 to 310, that's where these 3 separate indicators are all lining up together. I don't have the 200 SMA, but we do have our 251-day exponential moving average, our yearly long-term moving average. That comes in near 289. So another idea to consider there to help inform your trading. RSI starting to break to the downside. Green trend line being broken. We are below the 50 midline once again here. So that would be something worth noting if price and RSI both start making new relative lows. Finally here, volume profile. Quite a bit of heavy activity areas here, but one that stands out right about here, our borderline to the downside would be roughly 303 to 297 or so, right about this here. And then 289 to 294 would be this area as well. So some points of heavy trading activity to consider. Meanwhile, 308, our point of control, the heaviest area of all.
All right, and right now we are trading at 297.11 for JPMorgan Chase and underperforming the markets more broadly, trading down about 7% right now. Now, your next pick, Scott, couldn't have a more different chart. SanDisk here, up 1,200+%, I think, in the last year, up, I think, close to 200% just this year. Top performer on the S&P. Are you still bullish even with those giant numbers?
Probably in the long term, I'd say yes. But in the short run, I think this move that we're seeing, just this, one-sided volatile move to the upside is way too much too quickly. I know earnings were really good. The sector is hot. I'm just looking for some reversion to the mean here. So I'm going out a couple weeks, March 6th. I'm buying the 625, 600 put spread. Probably pay somewhere in the range of $6, $7 for that, depending on, where you get in. And again, this is not maybe an indictment on SanDisk of where it could be 3, 6, 9 months from now, but just really looking at the marketplace right now and saying, boy, this stock moved way too much too quickly.
All right, Rick, so we know it's moved a lot, and we know it moved very quickly. Are you seeing the potential that it might be ripe for a pullback here?
We're approaching our best close here. We haven't quite cleared it yet. And just a general comment, strong bullish rallies can also have ferocious downside moves kind of interspaced in between the swings to the upside here. So just kind of food for thought. But as I said here, that's around where we had our best close, 695 roughly. We're approaching that point. We broke to the upside out of this symmetrical triangle type shape, kind of widely dispersed range there, but kind of converging toward each other. We've now pushed out to the upside. So kind of this bull flag, bull pennant type of price activity here where you have a very sharp rally to the upside, a brief period of sideways to downward consolidation. And then the hope is, if you are bullish, for example, that the trend would then break above those initial highs and continue on in that direction here. So 725 was the intraday high, even that quite a good bit beyond that closing high as well here. Some other notable points to the downside. 572, a relative low, 541, around where we had another low point just beyond that as well. So when we look at our moving averages, our 5-day EMA, our dark blue weekly EMA here, 641, lines up pretty closely with our old trend line here. So we're starting to break above this notable point. We can see that our moving averages are still diverging farther apart from each other. So look for them to start contracting and for price to start closing below them. RSI breaking out very modestly to the upside from its downward sloping RSI trend line here, but not in the overbought area yet. The overbought area, a movement into that region above 70 in a trending market, is typically viewed as being more of a bullish sign. Finally, our notable volume areas here. We have one here near about 568 to 620, and then a much smaller one here, 465 to 513. Those are kind of the standout heavy trading activity areas here. Notice, though, many volume spikes, very heavy overall activity in this name in recent weeks.
All right, and as you look, even with the markets down today, SanDisk still moving about 4.5% higher here, trading at 679.43 right now. Now, your last pick here, we've moved into an ETF, Scott. We're talking about the 20-plus year Treasury Bond ETF. Take us through this one and if you're bullish or bearish.
Sure. So in TLT, which, as you mentioned, is the ETF for the 20-year bond, I'm actually bullish, which means that I believe rates are moving lower in the future. So works inversely, just like rates and the price of bonds are inverted to one another. So I'm buying the March expiration 90 strike calls. So we're right at 80, 89, 80 almost right now. These are the 90 calls, pay 75 cents. And this would pay off if we do see rates start to move lower. Now, I know we're not going to see another Fed announcement for a while here, but just given the overall macro landscape here and kind of with the 10-year touching last week down almost under 4%, if we approach that again, these calls should come in handy.
All right, Rick. So might we approach that again?
Well, you know, we have our eye on a similar level once again here. The 90 level seems like a standout potential breakout point here because that lines up roughly with where our gap to the downside began. We also tested that area just about a few days ago, a few sessions ago here. We didn't quite manage to close above it, but now we're approaching that same point again. So the gap has been filled. Price has had a very sharp upside move here. So that seems like a potential breakout point to consider if you did have a bullish outlook here. Overall, though, longer term trend line sloping down here in white, connecting those old highs near 94 with these lower subsequent highs there. So the trend line in question could be something else to consider if we start moving further to the upside here. To the downside, 89, we can see that was our old high point. That was where our gap began after it moved lower, and that's about where we saw some support more recently here. When we do look at our moving averages, once again, our faster 5-day EMA has made a very quick recovery above its slower moving counterparts here, so things are still accelerating more to the upside. We can also see that recently our orange 251-day EMA near 89 was supportive here, so our longer term moving average held the line there, so look to see if it can be another source of support going forward here. It seems like that could also be a potential breakdown point to the downside here. RSI slowing down somewhat, though, still trending upward, but our shorter term trend line has been broken in this case. When we do look at volume profile, the heavy volume areas, we are within one right here between about 89 to 90 roughly. So if we do keep moving higher, 91 to 91.5, kind of a very narrow range there. Perhaps would be another area of interest due to the heavy trading activity. To the downside, 88 is where things really start to pick up again. 87.30 is our point of control.
Yeah, we're trading just below the value of that 90 call right now at 89.87, up about 0.5% today for this ETF. Scott, we want to thank you for being with us today for Big Three and for bringing those picks to us. Scott Bauer, CEO of Prosper Trading Academy, and of course Rick Ducat, our lead market technician, for always breaking down the technicals for us.